All right, everyone, welcome back to Around the Block. We have our favorite guests here, Philip and Guilherme. We have a lot of things we want to talk to you guys about today, so stay tuned, stick to the end, and don't forget to like and subscribe. Let's go ahead and get into it. We have a lot of topics to cover, so let's go ahead and see what's going on with the market today.
All right, so what's up, everyone? This is Gil. Today, we would like to share you some volatility in the market today. I think Philip has quite a few comments about these reports that went today. So I am going to share my vector platform so you guys can see it more clearly. Just a second. Okay, now it's on. So, Philip, we noticed quite some movement in this morning. I think we had the US retail sales report, and actually, right now in this afternoon, also a lot of volatility. What do you think is going on with the market? Right now, we have the chart of Bitcoin in USDT. So, what are your comments on that?
Um, Thank you, Gil. So this morning, there was a retail sales report released that seemed to have a bit of a cooling effect on the market, hence the price depreciation you see around this morning. And most recently, about 15 minutes ago, the FOMC, which is the meeting that the Fed participates in monthly, they released their minutes from last month's meeting in which they raised interest rates 75 basis points. Now, the um, the significance of the minutes is that it kind of gives the idea or allows people to understand how the Fed came to that conclusion and helps them understand what their thought process is and therefore slightly better predict where those interest rates will be going forward. So some of the highlights, like I said, it just came out, but one of them was Fed officials saw a slower pace of rate hikes at some point, which is what a lot of people were concerned about, that these rate hikes would be imposed too quickly, and it would cause a lot of issues in terms of people defaulting on loans, things costing too much, not enough capital being available. And many officials saw this risk of Fed could tighten more than necessary, which is raising the rates too quickly. What they're doing is called quantitative tightening. So anytime you hear tightening, think higher interest rates. So that's what they've been doing. They've been quantitatively tightening. And the best part of the report was all Fed officials backed raising rates by 75 basis points. This is a board of people, so you could see how sometimes there may be some disagreement in terms of what the rate or the decision should be, but it's good to see that all Fed officials kind of had this understanding. They understood that there was a lot of fear in the market, as you showed last week, Guillermo, with the fear and greed index. We're going at least in a better direction away from fear, and that's because we know what's happening now. We kind of have a better understanding of what the government thinks about our financial environment. There was a lot of concern because people didn't know, really where they were heading. There was a lot of I want to say like political speech, which is where they say a lot but really say nothing. But now it seems like they're really delivering the message of what they plan to do going forward. So that's what they're seeing with this little volatility bump in the last half hour and this morning as well. But it's a good sign. If anything, it's a bullish signal that we understand this now, and everyone that made this decision on the Fed was in agreement.
All right, sounds quite interesting because, like you said, we had the fear index going a little bit more like something better last week, and now actually I think we could share again so everyone can see how we are performing in that index again. Let me just change into the other. screen just a second.
Yeah, no, that would be great. It's as we discussed, it's this market tends to run on a lot of emotion. Um, just given the participants, so much retail is in there. There's a lot of meme energy, these meme groups, so they tend to ride on in kind of a pack mentality, if you will. So um, one follows the other, and it's important to know these things. Really where the market is and how they're feeling at the time.
I mean, we've seen a lot of assumptions, I think coming to the market volatility and playing a role in why we see so much movement, right before these meetings, right before these minutes are released. We saw that the Dow is down 200 points, right? So there's a lot of things going on, a lot of emotion. And I think we have less fear and uncertainty, but it's still something that floats around. And, just as we always say, we have to be as safe as possible and always making our best educated guesses here.
Mm-hmm. Yeah. So while things came in looking good last month, it's really just the news that we had reached the peak, because every month up until then, inflation had been rising. We've been hitting 40-year highs, in terms of year-over-year numbers. And I believe in the UK, it's actually reached a 40-year high. But I'll shut up and let Gail show the fear and greed effect here.
No problem. So everyone can see, we have been having like better weeks, because last month we had extreme fear in the fear and greed index. We went down to 20 points, which is pretty low. Right now we are having 41, which is much better. So it's like I said last week, it's just fear. It's not extreme fear. So things are getting a little bit better. But as we can see, in the last weeks, in the last days, every report that the market releases has so much impact in the crypto market. So we are having a lot of emotion, a lot of kind of like still a little bit of fear, right? But we just hope things get better in the next following weeks, so everyone can be like more confident about the future.
Mm-hmm.
I
Yeah,
don't know if you guys agree with me, but that's what I see right now.
it's definitely important to understand the conditions you're in, because these markets go in cycles, and if you don't know what cycle you're in, you're going to be in trouble. During the bull market cycle, this recent cycle, I want to say that was really up until, you could say, May or arguably the end of last year. It was really easy to make money in the market. You couldn't pick a loser, because there was so much capital flooding in. It pretty much lifted all projects, and therefore their prices appreciated. But as that changes and all the liquidity washes out, it becomes more and more about the fundamentals and what's important, rather than the meme behind it, or as they say, the pumponomics, which are basically no utility, just great hype.
Right.
Mm-hmm.
I mean, speaking of fear, emotions, we see more continuing on with Tornado Cash and the sanction that the US Treasury has placed on them. And really, a lot of people are questioning, is it going to mark the end for Web3 and privacy in general when we speak about crypto, but privacy as a whole? Because I heard somebody, kind of play it in terms of, it's like saying that we're going to shut down the internet because people use the internet to hack, right? Or to launder money. So there's a lot of fear around that, a lot of emotions, a lot of people are not happy. And I think there's a lot of uncertainty in where our future will lie, with the US Treasury making more and more plays to sanction more and more places. Apparently, with their eyes allegedly on Monero currently, similarly to Tornado Cash, but they haven't made any allegations yet or any plays against them. But we do believe that they do have a close eye on what they are doing and how they are playing in the market.
Yeah, so I know Tornado Cash's parent company, basically the company responsible for Tornado Cash, was based in the US, but fortunately the US's jurisdiction stops at the border. So I'm not sure where Monero or the other privacy coins are based, but it's interesting because they typically use sanctions against individuals and against sovereign nations. This is the first time it's really been applied for technology. And it's really proving an interesting test case because as soon as those sanctions were announced, a anonymous address started sending or airdropping tainted Tornado Cash cryptocurrency to various celebrities like Jimmy Fallon, like presidents, like people So technically, those addresses are now banned from certain things because of this sanction. So it's really causing more of a headache than they realized, and you can tell that they didn't think this all the way through when they implemented it. Obviously, I think everyone agrees we don't want more crime. However, this seemed like a very lazy way to handle it and is going to cause them more issues in the future. And also, people need to realize that these protocols, just because they shut down Tornado Cash doesn't mean you can't use it. They shut down the pathways to it. As I discussed, the people who run the wallets like MetaMask that connect these protocols are able to kind of cut the pathway, so just not give you way to it. However, it still exists on the blockchain and it's still able to be used. I know they've been doing some things with their treasury and making some adjustments, but it kind of shows the power of or the powerlessness of sanctions. You could still do it if you want. However, obviously, there's a lot of eyes on things. I know one other major consequence of that was the company that creates USDC, Circle, actually blacklisted a bunch of addresses. So essentially marked them as tainted addresses for having interacted with Tornado Cash, and also blocked USDC, which they technically do as creators of it. So it's actually creating a push away from these more centralized cryptocurrencies and has resulted in a increase in people moving out of USDC, which is an interesting trend because we saw the opposite of that in the fallout of the Terra Luna collapse. People wanted to move towards USDC, towards the more guaranteed one. So it's really like a weighing privacy versus safety. It's really what you want. That's what's great about crypto. We have currencies that do the same thing but are on different scales, I guess, of I want to say gray area. So like USDC is completely backed. They have these attestations. It has all this cash, whereas Tether is a bit more opaque, let's say. But DAI, however, is a decentralized stable coin backed 150% by crypto assets. So, there's something for everyone depending on what your risk appetite is and what you want to do in the space. But the cash is going to be an interesting example going forward.
Right. I mean, we saw that the Dutch government placed a suspected developer of Tornado Cash under arrest, and they do say allegedly that there will be possible more arrests in the future. And I mean, we don't know for sure that we can claim these people are facilitating on purpose. They truly said, hey, we're here and we're doing this specifically for criminal activity, because allegedly that's why he was arrested, is for facilitating the laundering of money, right? So this is a very thin line, I think, and until we have all the facts, it's kind of one of those, it's a innocent until proven guilty type of things. And that's kind of how I'm going about it, not shooting everyone down from the get-go and saying everyone here is a criminal, but saying, let's get all the facts first. Let's make sure that we're looking at this properly without making these assumptions, without getting too riled up about the specific players in the game. But
I don't think you have to necessarily have criminal intentions to be considered a criminal. A lot of people are criminals by accident. So I think that what they did was really had the best intentions. And you can see that because they've been, they've been addressing everything that the sanctions have asked of them. They haven't been running. They haven't really, been hiding too much. They've been like, all right, we'll shut this down. What they were trying to do is protect really the one of the cornerstones of crypto, which is the pseudonymous nature of it. And as Vitalik Buterin actually tweeted, he used Tornado Cash to send funds to Ukrainian refugees in the Russian war because he didn't want, the government to be able to track or, Russians to be able to track funds going across public blockchains. So there are good use cases for it out there. And as we discussed, I believe in one of the early episodes, Chain Analysis estimated that the overall criminal activity on these chains is like less than 2% compared and far less than the dollars involved with. So I think it's something that's going to be increasingly used less for crime the more we go forward as these security companies and as the regulations mature.
Yeah. Well, I think, we've talked a lot about Tornado Cash. We talked about it a little bit more in depth in our last episode, but we can now move into talking about some more exciting things like the Ethereum merge and kind of what's going on with that. I know that they have announced a soft date of September 15th, so a little bit earlier than the original date of September 19th. Philip, what can you tell about this?
As I discussed in previous Around the Block episodes, I think Around the Block 7 is where we really got in depth. If you all would like to check out that video, there's a lot of really good stuff on the merge. But people are very bullish on this. This is really the news that's been carrying the market, I would say, the past month or two, particularly in relation to Ethereum's price versus Bitcoin. I'm not sure if Gil will be able to get that chart up in time before I finish, but I know in the same time period, Ethereum has appreciated 40%. Bitcoin is only up about 5 to 7%. So, you're starting to see that flippening meme come back, which is people are saying the market cap of Ethereum will overtake Bitcoin at some point. I'm not so sure about that, but, it definitely gives it legs when you see this type of appreciation versus Bitcoin. And there are various ways people are playing this. I think one of the most obvious ways is just really buying, staking, and taking advantage of that yield you're going to get consistently. And another one that's really been popular with more of the advanced traders is buying ETH in the spot market and then selling Ethereum futures after the merge. From what we can tell, traders are very bullish going up to the merge, but after the merge, there seems to be a lot of bearish options contracts. So what people are doing is they're kind of riding that spot price up until we get to the merge, and then they have selling what they're called put contracts, so the option to sell the asset post merge. And if the price is lower than it is now, then that's when they profit. So people have been kind of playing it both ways. And another benefit from doing this is the recent announcement by a prominent Chinese miner named Chandra Guo, who was actually involved in the original Ethereum to Ethereum Classic chain split. But he plans on launching a proof of work chain via a hard fork from Ethereum once Ethereum moves to proof of stake. Now, the reason for this is because Ethereum miners, like Bitcoin miners, use machines to do this mining. However, once it moves to Ethereum proof of stake, these machines will become obsolete. So in order to really get the most out of it, they're going to want to continue to, be able to mine. That is actually one of the big reasons you've seen such appreciation in Ethereum Classic the last few months, going hand in hand with the merge news. It's the miners on there are able to mine both Ethereum and Ethereum Classic, so it makes sense for them to invest in that. But it's really interesting that once the upgrade happens or the merge happens, what will happen with this ETH proof of work chain. People are going to be, all the ETH holders will get a proportional amount of ETH proof of work tokens, much like Bitcoin. When Bitcoin Cash split off, they got an equivalent amount of Bitcoin Cash tokens. So that's another play. People, hold ETH spot, get that free airdrop of Ethereum proof of work tokens, and then maybe dump them, or if they see value in the system, hold them. But that's another reason why people are holding ETH spot, and the spot price is going up so much. People have done this in the past where airdrops are likely. Uniswap tends to be the biggest one. Essentially, an airdrop is something when people just send you free money for doing something on the blockchain. With Uniswap, it happened to be interacting with it once, and everyone got about $2,000 worth of Uniswap tokens. And this is a similar thing, just for holding Ethereum. They will airdrop you this Ethereum proof of work token. So by having spot exposure now, you get that price appreciation plus the free Ethereum proof of work tokens. And then by selling the futures post-merge, you're able to capture that kind of sell-off pressure that a lot of people are predicting as well. So there's a lot of moves to be made, and a lot of bullish momentum going into it. And it's actually led to the highest open interest of Ether options all time. So as you can see, there is a bit of a correlation between that, and it would be interesting to continue tracking that as we get closer to the merge.
Wow, this is, exciting news. Let's take a look at this chart.
There it is.
Yeah, just like Philip was saying right now, the market is so bullish in terms of Ethereum, both comparing to Bitcoin itself. We had in the last weeks 46% high, which is quite a lot, and also Ethereum compared to the USDT, which is Tether, we had 70, almost 80% high in the last few weeks. So, Phil, I think it has a lot to do with about your saying that the markets is so bullish before the merge, and it can be much more bearish actually after the merge. So the traders have to be a little bit more cautious in this moment, right?
Absolutely, absolutely. And there's ways to hedge your risk as well, and deploy different strategies. For example, one of the ones I discussed a while ago was Lido DAO, which is a decentralized staking platform which allows you to stake on Ethereum, or most proof of work chains. Actually, I know they allow you to stake on Solana as well, on Polygon Matic, and I believe Avalanche, if I'm not mistaken. But it's number one place where people have been staking their Ethereum, and the reason for that is there's a bit of a post-merge trade there. So Steth has been trading at a bit of a discount. So Steth is spelled STETH, so like staked ETH. Has been trading at a discount to Ethereum. And when the merge is complete, this Steth will be redeemable 1-to-1 for Ethereum. So you'll be able to make up that discount you're getting with the Steth. So it's a way for people to capture a bit more upside if they're very bullish on the merge. But this, along with the macro news we've gotten recently, a bit of a relief, as we said, in the interest rate hikes, has really been helping the market out a lot. It's just, as Gil has shown, Ethereum has gotten more appreciation, really because of that narrative of the merge and what it will mean for ETH going forward.
And also, it was very interesting. We were talking about this earlier about how there are some misunderstanding regarding the merge. Myself, I heard, and I actually thought that there would be lower transaction fees, gas fees in Ethereum platforms, but it seems like it's not actually true, right?
No, that's actually a very popular misconception. There are several. I believe that's the most popular one, though. So the merge is just a change of consensus mechanism, not an expansion of network capacity. So if there was more capacity on the network, um, this can be in the terms of whether more block space or larger blocks. Then that would allow basically more transactions to pass through, and it wouldn't be so much congestion. The reason ETH gas spikes is because there's so much demand on the network. It's kind of like a bunch of cars trying to fit into the same tunnel. There's going to be a slowdown. And due to that slowdown, it's a bit of actually an auction process. The miners typically choose the transactions that pay the highest gas fees. So like, the professional traders that are looking for like this big arbitrage opportunity and are trading, high frequency, are willing to pay a ridiculously high gas fee. And that raises the price for everyone else because the trader, won't accept something that's lower. And if everyone starts going higher and higher, that's simply what happens. With like say a big NFT drop or some big announcement where everyone's participating in the network at once. So that actually won't improve because the consensus mechanism is really just how it reaches consensus. Whereas with the proof of work model, it was using as we discussed, computer to figure out the algorithm, solve and validate the transaction on chain. It's now a proof of stake network where validators stake tokens. Essentially, they put up collateral to validate transactions and then get a reward in return, much like Bitcoin miners get a reward for transacting. But that doesn't improve prices, as I discussed. Jasmine actually discussed last week some layer 2 solutions like Polygon, which is a side chain, which, for example, expands the network capacity by bundling transactions off chain, off of Ethereum, and then putting them on chain as one. So think about like instead of cars going through a tunnel, think about a bus. It's a bunch of people in one car going through instead of all these little cars going through. So it bundles everything and allows if there's a toll, we're paying a lot less because there's a lot of us, whereas one car would pay a lot more. So that's kind of the idea behind layer 2s. However, this isn't going to be applied to the merge at the moment. So I'm glad you brought that up. It's definitely something important to consider.
Yeah, and also, Philip, just make sure like everyone who's watching, and there might be some beginners. So just to make it easier for them to understand this example of the cars and the bus right now, because the network doesn't have a lot of capacity. So when we have this congestion of a lot of transactions waiting to be processed, uh, whoever pays more gets first attended, right? Is this how it works?
Yes, essentially. It's more or less an auction. So whoever bids the highest gets the transaction through first. And there are robots who are trading like 10,000 times faster than people and are willing to submit to extremely high gas fees if they could even just profit for $1. And they do that, enough times, they make a solid profit. But it's hard for retail people to keep up with these prices because sometimes you'll be paying $20-$30 just to send something or swap a coin, which is really frustrating if you don't have a lot of capital. So I know
That's
later,
crazy.
I know later they're going to be moving to sharding, which actually expands the network horizontally and will allow for those prices to come down a bit. But this event, September 15th, will not be that.
We can only dream.
Right? Yeah.
Yeah, right. Well, We've talked about Tornado Cash, we've talked about the Fed, and now I would actually like to hear from Guy. What is going on in Brazil? I've heard there are some good catalysts coming and some great news for the Brazilian markets.
Yeah, sure. So despite the bear market and all of the fear that has been going on in the global crypto market, in Brazil, things are quite interesting and quite exciting. We had two big companies in the last week um, launching crypto platforms. One of them is XP. I think that's how supposed to be pronounced in English, XP. It's one of the biggest Brazilian companies when in terms of financial market. They just launched the crypto platform, and I heard that their target is to achieve 200,000 active customers by the end of the year. So
Wow.
yeah, you heard right. Yeah, they just launched like August this month, and they're expecting to have 200,000 clients by the end of the year. So yeah, they are quite aggressive in this strategy. The Brazilian market is on fire. Everyone's looking into crypto, and so yeah, we can see that just like XP, we have also other big companies starting their business in the crypto market. The other one, which is quite famous in Brazil, is BTG, which is also a Brazilian company very relevant in the crypto market, in the financial market, which just launched their crypto platform as well. They don't have a very aggressive target, just like XP, at least not that I have heard of. But yeah, they're launching a crypto platform, and they're expecting to have quite a lot of customers doing trades in crypto. Just as an information, in the first weeks of operation, they will have just Bitcoin and Ethereum available for their clients because they're just starting their operations and things are adjusting with the time.
That's
But
XP, right?
that's XP, which is the biggest one, starting with Bitcoin and Ethereum. But for sure, they are already developing and thinking about putting some different tokens and new coins, crypto coins, in this platform as well. But just as information, if the client opens an account in XP crypto platform, they will be able to just trade Bitcoin and Ethereum. But because of this aggressive target of 200,000 clients, I think very soon they are going to have lots of new tokens and coins so people can trade freely. So these two companies launching their crypto platform are just examples of how aggressive the Brazilian market is thinking about crypto. And we have it's just the beginning, I think, because we have a lot of smaller companies also doing this movement. I think I talked about this 2 weeks ago. PicPay,
Mhm.
which is a smaller company but very important as well, already is talking about launching their own stable coin. A Brazilian company wants to launch their own stable coin. So yeah, things are getting quite serious here in Brazil. I don't know if you guys heard before I told you about these two companies having this exciting news, but yeah, things are crazy here.
I mean, just in general, if we think about Nalogica and Vector, one of the first and biggest players in the Brazilian financial market as well. Nalogica is the creator of Vector, the wonderful crypto platform that we use here daily. We have over 800,000 active users just in Latin America and are growing exponentially. And we're looking to bring, everyone all over the world into our platform so you guys can experience the amazing analysis that we can do here, all of the strategies that we do, and just see how in-depth this platform really is. So don't forget to check it out. It's a 15-day free trial in the description below. All right. Tell us about the biggest catalyst and the biggest topics that the public is talking about right now with these meme coins.
So we got an interesting boost over the weekend, actually, with Dogecoin as well as Shiba Inu. And originally, I wasn't quite sure what was going on, just because it's like meme coins, just whatever. But really, and this is like why it's kind of important to know what's going on, because you catch these moves when you're actually in the community. And one thing that they dropped in the community was news of the official chain for Dogecoin called Dogechain. So Dogechain is a Polygon edge based network. So it's based on Polygon technology that allows traders to convert Dogecoin to wrapped Dogecoin and then use that in various DeFi protocols, NFTs, and then other products that have been built out on the Doge network. I haven't heard Elon talk about this, which is very surprising because he's usually first at the punch with all things Doge, but it still seems to have the positive effect that they're looking for. And it'll be interesting to see what they do building this out. Now this actually provides some sort of use case for it. And what I believe Shiba Inu did better than Doge was that they built out a infrastructure pretty quickly in terms of having different protocols and other things that Shiba Inu could be used for. Whereas Doge, it's actually a lot older than people think. Started, I believe, 2014, if I'm not mistaken, but well before the last crypto winter. So it was still kind of built for that hard money narrative like Bitcoin is. And I don't think additional things like smart contracts and DeFi were thought of then, whereas Shiba Inu actually did do that. And it's pumping on a similar announcement of the Shibarium, which is an layer 2 solution for Shiba Inu, which will allow for cheaper transactions and all the other good things that I discussed with layer 2s before. But yeah, it's interesting seeing these pump on something like some actual news, some actual positive meme news.
Not just a tweet.
Yeah, instead of just a tweet or Elon Musk like naming his dog. It's good. I think it shows a bit of maturity, even though they're still dog coins. But yeah, as long as you're trying to, create utility around these things, I'm all for it.
Yeah, I mean, this is some really exciting news. I know that Shiba specifically has a really large community backing it, and they have been waiting and supporting the Shiba developers to create more and more for the community, and that's exactly what it looks like they're going to do. We can only assume that it's going to take some time to build, this, from being a meme coin to becoming a credible player in the game. But we see that they're coming up. Like you said, they're trying their best, and I think they're doing a great job so far. We did see that Shiba Inu has the Shiba Play app on the App Store, which is not actually directly correlated to the Shiba Inu developer team. So this is just, it looks like a fan community-based app, which will allow you to burn Shiba Inu tokens through its affiliate commissions to Amazon, which means, again, it will help reduce the amount of Shiba Inu out there and help with the scarcity. We don't exactly know who is behind this, so it is something that I personally am a little bit wary about. This could be something that, somebody could be scamming a lot of people with, so I am shying away from Shiba Play. But it is interesting to see that they are coming out with more things in support of the community.
Yeah, and also I would like to also make an observation. This is the last time I'm going to share Vector in this episode, I swear. But I have to show you guys this
Share all
thing
you want, man. Let's see it. It's the best
because
platform there is.
I just saw something very interesting regarding the Shiba Coin um, chart. I want to share with you guys. This is the last time. Just 1 second. Okay, now it's stable. So you guys can see 3 days ago we had an incredible 35% high in just one day in the Shiba Inu, um, comparing to USDT. And the more interesting is not only this 30%, 35% high, but also a high volume of negotiations is in this day. So uh, it's the same thing that Philip was saying, and Jasmine was actually agreeing. The community towards the Shiba coin is so strong, and they have. It's quite interesting that Musk didn't say anything so far about this latest news, but yeah, it just shows how strong the community is, and every day I get a little bit more surprised with how strong this token is. And to be very honest, I didn't know that the token has been there for 8 years. You said 2014.
Yes, I believe so. It was not long after. I could confirm that right now. But yeah, Dogecoin is a lot older than people think it is. Um, which kind of gives it credence that it's lasted this long if you think about it just on meme energy. Yep, December 6th, 2013, actually.
Wow.
Yep. So just going into 2014, but the longer these projects stay around, the more likely it is that they're going to keep going forward. So it's cool that they're building on it, and it's lasted this long. It's gotten to this point where there's such fever pitch that they're building on it now. And I know they've gone through their issues. I believe that the head developer of Dogecoin quit. I think he made this as a joke and thought it was kind of ridiculous how big it had gotten. It kind of got away from him.
It's just crazy.
Yeah.
It's actually sometimes it's unbelievable how far this joke, quote unquote joke, is going. So yeah, like I just said, every day I get a little bit more surprised
It's
with this.
it's just a reflection of how finance and culture are coming together, more so than ever before. And crypto is really responsible for that. You couldn't really do that in, traditional capital markets. You couldn't bet on what cultural icon is going to be most popular, what meme is going to take off the most. And in crypto, people do that all the time. It's really a very tribal kind of thing, but you can see it especially in these coins, in these meme coins. I mean, it happens with Bitcoin, Ethereum too. There's a tribal nature to them. There's a term called Bitcoin Maxi, which literally thinks that every other coin other than Bitcoin is a scam. I see these posts every day. It's amazing that people still think that. Given just what Ethereum has shown. But, there are people that are a bit more closed off. But I think what you have to do is really keep an open mind in this market, because it's nothing like what we've seen before in terms of the valuation metrics, really how you determine what's good for the market, what's bad for the market, and also how reactive it is. A lot of the time, the crypto market, because it's 24/7, because it you can trade all the time. It's not like the stock exchange, like it reacts to news like as soon as it hears it. Whereas, with stocks, you have to wait until Monday to trade if something happens over the weekend, and there's all this stuff. Crypto is very interesting. I feel like it's becoming more and more mature, and you're kind of seeing that as these meme coins become mature. I think that's the biggest show that they're creating value out of something that just started as a joke. But I'm all for it. It's great learning about this stuff and seeing how much market cap a popular dog can get.
All right. Yes, those are super exciting things. I mean, I'm a meme girl myself. I love me a good meme, love me a good GIF. I also like Jif the peanut butter. Both great. But to wrap up our episode today, I think we had some really great topics. I want to thank both of you for being here and our audience. Of course, we couldn't do this without you guys, and I am happy to announce that we have hit 1,000 subscribers. So a new milestone. And hopefully the next time we can announce it, we'll be hitting a huge milestone of 10K. So Let's bring some of that meme energy to our channel, guys. Don't forget to like, subscribe, and give these lovely fellows here a hello in the chat. Don't forget to connect with us on the Vector Connect chat, and we hope to see you on the next one.
All right, see you guys in the next one. Stay safe, and thank you so much for the 1,000 subscribers.
Yeah, take care, everyone. Stay safe. Don't trade more than you can afford, and always do your own research.
Lovely advice for the day. See you guys.